He used the word pain 3 times in one paragraph. I've been following Fed news for 45 years. I've never seen the word pain ever.
Hey guys, welcome back to Library of Wealth. Today we have Jim Rickards giving us his take on the current market and what we can expect in the crash that's just around the corner. Rickards will also walk us through the current state of uncertainty we're seeing, as well as the role the Fed has played in recent weeks that's leading to the biggest inflationary environment in history. He'll talk about why he believes we've been in a depression since 2007 and what effect this will have on the economy and the stock and crypto market up until the end of the year. Let's check out this interview with Jim Rickards, where he discusses his prediction for the crash that will shake the financial market and why he believes power is changing from the fiat money world and what effect the massive amount of inflation is having on our currency. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
So you got a lot of people who lost the habit, a lot of people staying home, watching, maybe the World Series or whatever, eating Doritos, but they're not working. And, a lot of people out of the habit, but they just got used to government handouts. Not everybody, but some. The other problem is, because people say, wait a second, how can you have low labor force participation when everywhere you look, there are help wanted signs, which there are. I mean, right. McDonald's is paying $35,000 for an entry-level cashier with benefits, training, and advancement. Well, that's pretty good. And people call this a labor shortage. There isn't actually a labor shortage because we just talked about how you've got perhaps as many as 10 million, people between the ages of 25, 54 who are sitting home. But the problem from the employer's point of view, there's a shortage of willing workers.
Not
Not workers, but willing workers. Well, what makes you willing to work? Well, a raise, a good pay is one. As employers can't afford to pay the clearing wage to get people off the couch because they'll go bankrupt themselves. They're working on very small margins. Sales are declining, et cetera. So I'll pay as much as I can to get the workers, but it's not enough to get this person off the couch, so to speak. And so you've got this really weird situation. I use weird in the technical sense, where you have a huge pool of able-bodied, potential workers, but a shortage of willing workers because you can't pay a clearing wage. But that's more a reflection of how stressed businesses and how low margins are. And then you look at the big names. I mean, I guess Twitter is the most recent, but Amazon, FedEx, Target, they're all looking at big layoffs, but none of which is good for the U.S. economy. But the unemployment rate is almost irrelevant. First, that's a lagging indicator. Secondly, it ignores what we talked about with labor force participation. There is no Phillips curve. I mean, you can draw one. Last time I saw a Phillips curve was flat, but they're just looking at the wrong indicators.
Rickards goes on to say what he thinks about what's going to replace the U.S. dollar as the world's reserve currency and why, because of the infrastructure, China and Russia's current monetary system cannot. Rickards also believes that the global crisis we're seeing now is just a preview of what's to come in the months leading up to 2023, where we'll see the largest financial collapse in history.
Jay Powell said this. I mean, Jay Powell gave 2 speeches, August 26th at Jackson Hole and September 21st after a press conference after the FOMC meeting that day. He used the word pain 3 times in one paragraph. I've been following Fed news for 45 years. I've never seen the word pain ever. But he basically said the same thing. But September 21st, he was even more blunt. He said, there's going to be a recession. It's going to be bad. Unemployment is going to go up. Get it straight. These things are going to happen. And that's what it's going to take to get inflation under control. But he went on and on about how inflation was job one, because the Fed has this dual mandate, which never made sense. But what Powell said, he didn't say that their target is core PCE, personal consumption expenditure, price index, core meaning excluding food and energy. And everyone's like, why would you exclude food and energy? Again, I'm not here to debate it. That's what they do. So if you want to think like a Fed head, that's what they do. Okay. They want to get core PCE year over year to 2%. It just came in at 5.2, which was up from August. The September was 5.2. August was about 4.7, give or take. It just went up. I mean, it's not going down. So they've got to get rates high enough. So they're going to go 75 basis points in November. December, who knows? We'll know closer to the date. It'll either be 50 or 75. Some talk about 50, but it doesn't matter. I mean, it's going up. Probably going to go up. I have the calendar for 2023. There's a meeting February 1st and another one in late March, I think March 22nd. They'll probably raise up both of those. They're going to get rates up to five-ish. At that point, they probably will have achieved the goal of bringing core PCE down, but they will also have destroyed the economy in the process. This is the latest in a long string of Fed blunders since 1913. If we're on the verge of a global liquidity crisis, as revealed by the Eurodollar futures curve and the Treasury yield curve, and negative swap spreads and Treasury bill auctions with the yield to maturity below what the Fed will give you for a phone call, I mean, all those things are happening. That's hard data. And it's a very, very troubling sign, last seen in 2008, by the way, before the Lehman Brothers meltdown. If all that's happening and the fundamental signs are also weak, which we just saw in third quarter GDP, which is based on net exports, which won't last. How are you going to drive a trade surplus with the strongest dollar in 20 years? Good luck with that. I mean, nobody can afford our stuff, and we're not buying anybody else's stuff. So with the economy going into a recession on its own, with a global liquidity crisis brewing, why on earth is the Fed raising rates at all?
Okay. And so does that imply then, if we just sort of let the system take care of itself, that CPI would get pulled down anyways?
Go back a year ago, so November 2021, every headline you looked at, website, commentators, supply chains breaking down. There's no, they couldn't get cream cheese to make cheesecakes at Junior's, the world's most famous cheesecake place. Last spring was the baby formula shortage, which was serious. I mean, mothers couldn't feed their children. So it was very bad. And I talked to my editor about the book. We said, okay, let's do it. And of course, and so I've got 3 chapters to start. One on just anecdotal stuff, kind of thing I just mentioned. How bad is it? Chapter 2 is why. What caused it? When did it start? And
right, how we get here. Yeah.
But I found some really, really interesting research, because everyone says, well, yeah, COVID messed it up and the war in Ukraine messed it up. Well, that's true, but it didn't start there. This started in 2018 with Trump's tariffs. Because I'm not here to debate the tariffs. I actually think the tariffs were a good idea, but that was the start of the supply chain breakdown. Because when Trump put tariffs on appliances, washing machines, refrigerators and stuff, and then solar panels, and then, technology, and then they just kept piling on.
Okay,
Well,
and sorry to interrupt, but did that mostly impact goods from China, those tariffs?
Yes.
Jim Rickards says this is a make or break time for markets around the globe, and the crypto industry at large has too many working parts now to be stopped. Although he does have a slightly different opinion on government regulation, only time will tell. Rickards isn't surprised about those that hold a favorable position with the United States government, especially those that support the dollar as the world reserve currency. He doesn't believe government should be involved, and says that the longevity of cryptocurrency is designed to survive without intervention from any governing body, and that includes Bitcoin. What do you think about Jim Rickards' interview on the coming market crash? Comment down below. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.